All right, we're just going to go over some opportunities that prevailed today. Alright, so all this crap. So market goes up, and then we'll take a look from this area. Right? So we see selling pressure, pullback is small, goes down. I don't really see any signals. I don't know why, but this right here is pretty obvious. The 155 stocks course of 12 minutes, followed by a very pathetic pullback. This is a big problem. Right? And it goes down. So the one thing to note is what happened here. So the market, it does stuff like this, meaning this is an upthrust, and you could tell because I think I have some auto stuff on, but anyway, so I lost my place. This is just a shakeout maneuver, because it went to support here. It went to support here on another time frame, and it rallied from support and just got sold off. And that's it. That's all she wrote. Continued to go down. Were there any low risk entry opportunities? One presented itself over here, but it screwed everyone because it was at support, and you have to know when the market's at support on whatever time frame, whatever high level time frame. All right, and it continued to go up. No pressure, no pressure. Nothing, nothing, nothing here. Some pressure came in, sprung, rally. Where the hell is it? Yeah, over here. You see over here? And then correction, pullback, rally, pullback, rally, pullback. So over here, you had a turn. How do you know the turn is coming? There's an increase in time and, I guess you call it breadth. Time and breadth, or time and stocks, or whatever. Price and, I'll just call it price time, but I think you all know that this is 49 stocks rallying and this 129 stocks rallying. That's good enough. Followed by low pullbacks, so it goes higher. It continues to do that until this point, and this is where the opportunity is presenting itself. Why? Because you are selling, pullback, pullback, weak, goes down. So you have confirmation and all that stuff here, right? So what's the point? The point is, this should have had a signal on it. I don't know why it didn't. Take a look at that. This one definitely has a signal on it. So you see this selling wave? I do. Probably. Oh, I know. Son of a gun. Anyway, so over here, what you have is you have selling, and then this lack of demand, and then fall through. So now you have to get in. I mean, it's very clear, right? If I show you, that it goes up and then it goes down, and it had attempted twice to go up, and still went down, breaking multiple levels. 131 stocks. Look at the breakdown right here. Heavy pressure. So what is this? This is selling pressure breaking support. Lack of demand goes down. Just have to get in, all right? Don't overthink it. Don't be a rocket scientist, all right? All you got to do is get in. So opportunity does present itself this time. Ooh, right there. These bricks are perfect opportune bricks to take short against. high volume, it's going to get tapped or mitigated or whatever, right? It's going to get tapped, and down she goes. There's your money. See? So what I'm explaining here is nothing more than trend change. It's like turning point trend change, the way Wyckoff explained it. You're going to notice that he did do intraday studies. So all you got to do is go get those intraday studies. He did it on a 5-minute chart, and he explained the turning point of a 5-minute chart. That's what you want to use for the intraday style trading. What you don't want to do for intraday style trading, and I'll be very specific, is do not use the stuff that's online that I don't know, some bullshit with phase A, B, C, D. That's all fake. That's the first thing you got to know. Second is you don't want to use point and figure intraday, just X's and O's. I have used point and figure with the actual prints, and those are valuable, but just X's and O's and trying to predict intraday target, intraday, not swing, but intraday target, that also doesn't work, or at least it didn't work for me. I don't think it works. The thing that Wyckoff did was he used point and figure with the volume print in them. Instead of looking like an X and an O, it had a volume print in it. So the modern day adaptation of that would be a volume at price type of chart, which I think like Footprint, Renko with volume, which is very used by very few, including myself. Probably, yeah, it's just a bar, but in the bar you have volume and being able to read that. So anyway, long story short, go get the intraday study by Wyckoff, which he did on 5-minute charts to trade the intraday. He explained the purpose of a wave chart, and this is very, very important for Wyckoff traders. I'm only reiterating it because nobody else does. So you got to understand this. The Wyckoff wave chart, and I'm not talking about like the 5 leading or whatever. I'm just talking about a wave chart, zigzags. All right. Now, what is its purpose? Its purpose. One purpose was to teach tape reading. Why? Because the up waves are demand and the down waves are supply, and you can compare them. And he wanted, and the up wave to the prior up wave, along with the down wave to the prior down wave. By observing the price, volume, and time on those waves, you will eventually read them. And you have to master the reading of the big waves as well as the small waves. Why? The big waves will represent changes of behavior, climactic action, etc., etc. The small waves identify the lack of demand and lack of supply when the market turns. All right, so you gotta know the intraday studies. They are available free, probably, because it's been around for decades. You can get that. And it's there, 5-minute charts. So the purpose is 1, tape reading. 2 is for entry with small risk for a large swing. You use the 5-minute waves to enter for small risk on swing positions. And this is what Wyckoff explained. Nothing of this is coming from myself. It's just saying, he explained that this is how you make massive risk, massive reward to risk. So that's the second reason. And the third one was for short-term day trading operations. Is what I'm showing here. So what's the short-term day trading operation? Right here. You see, you have a trend. It gets broken. Well, you have a selling wave, 131 stocks, 12 minutes. Pullback is only 2 minutes, 1 minute. What is that? That's time factor, telling you that it is done. What is done? Demand is done. So what is that? Lack of demand. Then what happens? It goes down. That's how markets turn. Similarly speaking, here you have 6 minutes, 129 stocks rally. Look at the pullbacks. 2 minute, 2 minute. How many stocks? 20 and 40. Who's stronger? Look at how shallow the pullbacks are. What does that mean? Demand took over. That's tape reading. How am I doing it? Time and price. First two factors are time and price. Then, if you want, you can use volume. Another example up here is the same thing over and over again. What happened? Bang, right there. The 155 stocks in 12 minutes. What's the pullback? Only 2 minutes. You don't have to be a rocket scientist. You know. Does it work all the time? No, obviously not. But here's only 65, followed by 3 minute up wave, followed by another confirmation. But what they did, and they do this sometimes on purpose, is there's a final shakeout. So this is a trend change. You have big wave, you have confirmation and all that, but there's one final screw job. This is what you call like hypodermic or shakeout or whatever, for the purpose of offloading, because someone knows that there's going to be a downtrend following. See? It's like one last rally up to sell high. I don't know where the rest of this is, but so that's the easy method. Not very easy, but you get the idea. All right. So take care. Have a good day. Bye.